Why banks don't want the CFPB to disappear. That's what I'm talking about in this video. And I'll get started first, with a lot of conversations were had about this in the last week or so when I went to a convention, even met with a criminal defense attorney at a random friend's dinner. So big banks and really banks in general have been pushing back against the CFPB for years, right? But this article by CNBC, and I'm going to share my screen here in a second, really points to some interesting points for and against the CFPB. So, last week was Funders Forum and Brokers Expo. If you aren't aware, I was happy to see everyone there. Had an opportunity to MC the whole thing. Really, great experience, and glad the whole convention went well, as far as I could tell. One of the panels up there was a legal panel that discussed the CFPB at length and the different things that affect small business lending, revenue-based financing, and really how everything's interconnected with what's going on at the CFPB with layoffs, massive layoffs, kind of being reduced to rubble, but then legally has to be a institution or an entity per law per unless Congress does something, and but doesn't mean that they can't reduce the staff and then they just sit there and do nothing, or not, they're not even at an office. So this article by CNBC points to that and says, well, look, the banks, although they've been pushing back for years and suing them and countersuing them, and for fees and for over regulation, that they, even with all that said, they still want there to be some form of CFPB to regulate and to provide stability for the industry. So here's the article published yesterday. The key points, the author, Hugh Sun, says that, with the CFPB on life support, the agency finds itself an unlikely ally, the same banks that reliably complained about its rules and enforcement actions. The Trump administration succeeds if they succeed in reducing the CFPB to a shell. Banks would suddenly find themselves competing with non-bank financial players, including big tech and fintech firms. I would add small business lending and those firms as well, with far less scrutiny than FDIC backed institutions. Goes on to say, payment apps like PayPal, Stripe, and Cash App, Stripe, of course, and PayPal offer working capital, loans, or advances. Those sorts of things, they would get close to a free ride at the federal level. And this article doesn't necessarily go into it, but you've already seen cases dropped. You've already seen kind of people that were going to be pursued, or even fines that were already levied, may be appealed by the CFP or by those institutions to the CFPB. So it's already happening. It's not just like in the far, future or anything like that. It's happening now, and they've already dropped cases against people that they were pursuing. So, the article, you can read it. I'll leave the link for you. But the same banks that reliably complained, under the actions of former director Rohit Chopra, are now thinking, okay, it's not going to be a great idea. So it says the the CFPB is the only federal agency that supervises non-depository institutions, so that would go away, including, PayPal, Stripe, and Cash App. Again, they would get close to a free ride. The shift could wind the clock back to pre-2008, where it was largely left to state officials to prevent consumers from being ripped off by non-bank providers. The CFP, of course, was created in the aftermath of the 2008 financial crisis. So since then, digital players have made significant inroads by offering banking services via mobile apps. Fintechs, PayPal, Chime, and many others, all the way down. Um, and this specific actually sentence says PayPal and Chime alone had roughly as many new accounts last year as all large and regional banks combined. So it's saying there that's a big chunk. If these guys are able to get away with things that they're not, the bigger banks, then there's a problem. So if you're the big banks, you certainly don't want a world in which non-banks have greater degrees of freedom and much less regulatory oversight than the banks do. This part goes into exams So right now everything's in kind of limbo because there, have been massive layoffs, but there's also been fight in the courts about if that's even legal. And the it says the Doge department quickly laid off about 200 workers, and they took steps to end the agency's building lease and canceled reams of contracts required for legally mandated duties. So there's legal stuff that has to be in play, including the CFPB in and of itself to be information. Whether it works or not is another story. And then excuse me, they're looking to remove even more, roughly 800 supervision and enforcement workers. So no one's going to supervise anyone. No one's going to enforce any actions, any laws or policy violations or any violations. Um, there are shared plans for more layoffs that would leave the agency with just 5 employees. That would obviously kneecap the agency's ability to carry out its supervision and enforcement duties. And then it just kind of goes on to say a little bit more about that. But the Consumer Bankers Association, a frequent CFP critic, talks about what they would want. The CBA is which represents the country's biggest retail banks, has sued the CFPB in the past year to scuttle rules limiting overdraft and credit card late fees. More recently, it noted the CFPB's role in keeping a level playing field among market participants. So they believe the new leadership understands the need for examinations for large banks to continue, given the intersections with prudential regulatory examinations. So he goes on to say, Lindsey Johnson, the president of the CBA, importantly, the CFPB is the sole examiner of non-bank financial institutions. There's who's now considering merits of a lawsuit. Okay, and the last paragraph here or section is, in the meantime, banks, their executives have gone from antagonists of the CFP to among those concerned, it will disappear. All right, it talks about Jamie Dimon and what he said a few months ago. And then, there's a growing consensus that says that the initial push to delete the CFPB is a mistake. Besides increasing the threat posed from non-banks, current rules from the CFPB would still be on the books, but nobody would be around to update them as the industry evolves. So small banks and credit unions would even be more disadvantaged than their larger peers if the CFPB were to go away, industry advocates say, since they were never regulated by the agency and would face the same regulatory scrutiny as before. So this, and it goes on a little bit more, but kind of the same conventional wisdom. It talks about, they want thoughtful policies, it says here, that will support economic growth, maintain safety and soundness. So, overall, it's saying that, look, and this goes on all down the business lending and really consumer side of things but on the business side of things, business lending from the bigger banks on down, they want someone in place. And we've talked about this in the MCA, revenue-based financing world for years. Regulation. It's come down to the state level, not on the federal level. And so the CFPB being a federal agency, it's certainly not going to come down anytime soon. And they're going to leave it up to the states. The states are going to, have to figure out from the myriad of complaints that I am guessing will be happening for now in the next 4 years. And, I think I mentioned at the beginning or if I didn't, then I spoke to a criminal defense attorney over the weekend. And he kind of had the same thing along the lines of the overall government institutions that were for enforcement, including the CFPB, the FTC, and more. They're just not going to prosecute things. They're not going to pursue unless it's the most egregious cases and that it, of course, goes against the new administration in some way, form, or fashion. It's going to be a wild, wild west. That's what a criminal defense attorney told me before I even mentioned anything about my thoughts, news, or anything that I even knew. That's kind of where we're at. I would love to know your thoughts. This article is really interesting and it's going to continue to go because these moves are fast and furious. So let me know what you think. This is simply my thoughts for today. You never know when things change. All right. Again, my name is Shay Mahabir, and we'll see you next time.